Hello, and welcome to the third episode of Season 7 of the Dark Money Files, in which we shine a light into a murky world. I'm Ray Blake. With me is my co-host, friend and business partner, Graham Barrow. Hello, Graham.
Hello, Ray.
Illicit financial flows, Graham. Now, that may not be everyone's cup of tea, but I'm really looking forward to this episode.
Well, I am too. It's one of those subjects which is much quoted and I think rather less well understood.
I agree. And I think it's good that we're doing an episode that requires us to explain the conceptual framework for a statistical model. That sounds quite fun to me.
Well, I agree. And I'd like to think, Ray, that one of the reasons our podcast has proved popular is for exactly that, taking a well-known but complex subject and explaining it in fairly layman terms.
Yes, but I feel we might have our work cut out today, Graham. That shouldn't stop us having a go, though.
No, I agree. So, look, do you want to explain what our starting point is?
Right, will do. Okay, so in October 2020, not so long ago, the United Nations Office on Drugs and Crime, the UNODC, as we know them, issued a document detailing the conceptual framework for measuring illicit financial flows, or IFFs.
And it's one of those statistics we hear about all the time, which comes from a UNODC piece of research back in 2011 or 2012, doesn't it?
It does. The figure of 2 to 5% of global GDP being attributable to cross-border IFFs was contained in that analysis. And that equates to about $2 trillion most years, and that's always been an eye-catching reference.
Yes, it does. And Ray, it appears in just about any article I've ever read which seeks to explain the global money laundering phenomenon.
Alongside the we catch about 1% of figure.
Yes.
But then how often do people bother to check just how accurate and applicable that is?
Well, I agree. Probably, I was going to say not much. I'm probably going to say not at all. So come on, maybe we should start by defining what they actually mean by an IFF, an illicit financial flow.
We really should start with the definition. I mean, intuitively, I think we all think we know, but I mean, let's dive in. The UNODC defines IFFs as financial flows that are illicit in origin, transfer or use, that reflect an exchange of value and that cross country borders.
Now, I think we should look at each bit of that in more detail, Ray. Now, to start with, a flow is considered illicit if it is generated illicitly, say from organised criminal activity, or if it's transferred illicitly, so as, say, to avoid exchange or currency controls, or if it's used illicitly, for example, to finance terrorist activities.
And that's actually a very helpful breakdown, I think. Exchange of value means this is more than just about financial transfers. It can also include goods, services and other non-financial assets, as well as bartering illicit goods like exchanging drugs for cars or property.
Important point. And it is measuring the flow over a given time rather than at any one specific moment in time.
Yes, absolutely. So if you think in terms of a shop, it's measuring turnover rather than a stock take.
Well, that's a very good analogy, Ray. And that last point is important, isn't it? Because these are cross-jurisdictional flows. They do not measure criminal activity or any sort of financial crime that occurs and remains within the border of any one particular country.
That's right. Our homegrown crime is accounted for separately. Of course, there's quite a lot of detail sitting underneath that definition that we read out. And the 2020 paper does a fine job of explaining that as well. It breaks down IFFs as arising from four main types of activity. first is tax and commercial activity.
And that includes aggressive tax avoidance, which may not be illegal per se, but is seen as being potentially detrimental to sustainable development in many countries.
And then there is illegal markets, such as trafficking in counterfeit goods, drugs, firearms, or the smuggling of migrants. Then there are IFFs from corruption, which includes bribery, embezzlement, abuse of function, trading in influence, and other acts. And then finally, the financing of crime or terrorism and other exploitative acts, for example, trafficking in people.
Yeah, and the distinction between smuggling and trafficking in people is that smuggling is seen as an illegal but voluntary act, whereas trafficking is both illegal and involuntary.
And incredibly sad as well.
Completely, yeah. Just to add to the complexity, each of those four activities can emerge at two distinctly different stages. First, as illicit income generation, which means effectively transactions involving illicit goods or that generate illicit income. And secondly, illicit income management, which involves the investment of illicit income in financial or non-financial products.
Which sounds an awful lot like money laundering to me.
Well, yes, it does.
Okay. Well, let's talk about those in a bit more detail then. With income generation, you'd think that would be quite straightforward to measure, but there are three different ways of doing so.
Okay, and they are?
Well, firstly, the value of goods produced in a given time frame.
Calculated how?
As a simple measure of quantity times price.
Okay, what price though?
Oh, okay, yeah, right. The retail price in the market.
Which may well not be the price they are actually sold for.
Exactly. So the second measure is called intermediate expenditure.
Okay, and that means?
The value of the goods acquired to produce the goods sold, like the cost of buying precursor chemicals to make methamphetamine, for instance. They're much cheaper than the finished product, which has had, value added to it in a criminal sort of way.
Yeah, okay, I do get that, yes. And the third method?
Value added or net income, which is effectively method 1 minus method 2, or to put it another way, the profit obtained after paying the intermediate costs and then realising the value of the goods.
Well, that all makes sense, Ray. Well done.
Thank you very much.
In fact, to go back to your shop analogy, which I liked very much, that's a bit like measuring value by looking at turnover, the cost of goods, and the net profit, or all of them, along with the ratios, I guess, between each.
Oh, that's absolutely right.
Good. Now, shall we talk about illicit flows then from income management?
Yes, and this time it's not about the flow of illicit goods themselves, but the use of illicit funds to buy goods or services abroad.
Okay, I think I've got that. But presumably that doesn't include where those goods or services are used to produce other illicit goods, i.e. the intermediate cost stage.
Well, that's exactly right, Graham, because until they're manufactured into illicit goods, they're not, per se, of themselves illicit. But it does include the acquisition of foreign financial or non-financial assets.
Like, for example, buying high-end property in posh parts of London or other desirable locations.
Yeah, exactly. And this is where it all gets rather interesting, because these flows are not symmetrical. The outward flows depend very much on the domestic market for illicit activity. So, where you have very significant organised crime activity or high levels of corruption, you will likely be a net generator of outward illicit flows.
Okay, whereas if you are an attractive home for such flows, like the UK, you will likely be a net recipient of those flows.
It's all a bit balance of payments, isn't it?
Yeah.
And this is one area that we've said for a while is not well addressed in the FATF mutual evaluation process, which seems to focus more on the factors that generate the first element, but less so on the second.
Yes. Of course, there are other factors at play here, which we should also mention. One of them is the difference in tax rates between countries that might act as a magnet for money to flow from high to low tax environments, and not always legally.
Oh, that's shocking, Graham. You do surprise me. In other news, water flows downhill. We also need to assess the incidence of migrant workers sending money home via informal and often illegal channels.
Yes, absolutely. Going back to the subject of tax and trade, these flows can be hard to measure, especially when trying to draw the distinction between, for example, aggressive avoidance, which is legal, but can be entirely artificial and devoid of any commercial value.
As opposed to evasion, which is definitely illegal and usually involves the movement of funds to other jurisdictions, often carefully disguised and often using shell companies, with the sole purpose of not paying tax which is rightfully due on them.
Yeah, and here the paper goes into some detail about the impact of such structures, often designed to hide true beneficial ownership, blimey, and how they flow to tax advantageous jurisdictions accordingly.
That water does continue to flow downhill for some reason.
Just does.
Okay, so that's what needs to be measured. We should talk about how they can be measured now.
Yes, and here we may need to get a bit technical, but we will do our best to make it as straightforward as possible.
We absolutely will. At a high level, there are two possible approaches, top-down and bottom-up.
Well, then we should talk about both. Ray, let's start with top-down.
Okay, so this is a way of measuring IFFs by looking at aggregated data and identifying inconsistencies within them.
Okay, what types of aggregated data would they be?
Currency demand, international trade, and, say, balance of payments data.
Okay, I think we need to talk about those in a bit more detail, right? So let's start with currency demand. What do we mean?
Yeah. So at its most basic level, this is the demand in the market for particular currencies. It was noted back in 1958 that the underground economy was essentially transacted with cash, and this could distort the ratio of cash to broader monetary measures.
Okay, and I guess if that cash is being used in countries outside of its country of origin, it has to make its way back there somehow.
Like happened with HSBC in the 2000s. They were doing enormous amounts of dollar banknote business, repatriating notes from Mexico back to the US for a margin. When they got fined and put under a deferred prosecution agreement by the US authorities, it was partly because that level of business could only have arisen from the drugs trade. More so, as Mexicans generally are not allowed to have dollar-denominated bank accounts.
Bit of a hint. Well, yeah, that's a great example. So I think international trade probably speaks for itself, that there should be ultimately some sort of netting off between the amount of goods being traded internationally and the national balance sheets between all of those countries should even out, shouldn't they?
Yeah, and likewise the balance of payments. This is a bit like a household income and expenditure account, the balance between what you spend with other countries and what they spend with you. Of course, it's not quite that simple in practice, but this is economics, and that's about as accurate as it gets, and that's a decent working definition.
Yes, I agree. So, okay, that's top down. So what's bottom up then?
Okay, so that's a method that looks at specific illicit activities and tries to measure them directly. As we've already explained, by analysing the different types of flows and putting values to them, an overall estimate can then be generated, and bottom up is therefore the preferred approach.
Okay, so where does that leave us then?
Well, the paper makes clear that having set out a clear, defined approach, the next step is to develop and test a range of statistical methodologies consistent with those definitions.
Easy, yeah. And as the paper makes clear, some activities are just inherently easier to measure than others, like drugs, people trafficking, the illegal wildlife trade, partly because data is already collected at national and international level and it's compiled in a systematic way, so it's reasonably consistent.
Others, though, are much more challenging. Things like bribery and corruption, illicit enrichment, abuse of power, and illicit tax practices are by their very nature well hidden and hard to detect, especially when they're conducted at state level, which means the data itself can also be manipulated to hide the criminality for one reason or another.
No, can't believe it. All right. Okay, well, I think that's about as far as we can take the subject today.
Phew.
Hopefully, yeah. Well, hopefully that has shone a light, not so much on a murky world, but a set of statistics that can now be used to better illuminate the subject.
Oh, very good. See what you did there. So what's next, Graham?
Well, Ray, I thought, what about doing a podcast on the role of critical thinking in a forensic investigation?
Okay. Well, I suppose my response to that is I'm looking forward to it.